I'm Charlotte McLeod with investingnews.com, and here today with me is Ross Beaty, chair of Equinox Gold. Thank you so much for being here.
Pleasure, Charlotte. Nice to see you again.
Oh, of course. Really good to be catching up with you. It's been, I think, about a year since we touched base, so lots of things for us to go over. I think we start definitely with gold. I always enjoy talking to you about gold because you make me feel so confident in where gold is going. So, yeah.
You know, Charlotte, it's not hard to be bullish on gold. In fact, that's probably for me as a contrarian, as a lifetime contrarian, I'm most worried because everybody's bullish on gold right now. You know, you go through every single mining analyst, the real smart guys in the sector, smart people in the sector, in the investment world, and they're all forecasting higher prices. The gold market is an odd one in the last few years, really ever since the Russian invasion of Ukraine, because for various reasons, but especially because certain countries wanted to get off the U.S. dollar as their functional reserve currency, central banks have been buying gold. And this is really unprecedented in my lifetime. In fact, in the 90s, most central banks were selling gold. The Bank of England sold out of its gold. Canada sold out of all of its gold. But of late, a lot of countries have wanted to reposition their holdings of reserve assets. And so led by China, but by no means only China. China bought 700 tons of gold last year. That's you have to multiply 70 times 30, and that's an awful lot of gold. And then it wasn't just China. It was India, Uzbekistan, Poland, Turkey. You know, you could just name a whole bunch of countries that bought gold as an alternative currency asset, which demonstrates gold's long-term abiding store of value. And a lot of retail investors in China and India and Vietnam bought more gold than they've ever bought before as an offset to concerns that their own currencies were potentially going to decline. And that's exactly what they did. So you had all of these new buyers of very large amounts buying gold in an environment when the dollar was strong and it got stronger. Yields went up, not down. Of course, quantitative easing was ending and quantitative tightening was going to begin again. Inflation was reasonably high. It was coming down, but it was still pretty high. A whole bunch of factors that are typically very negative for gold. And that's why a lot of the smart money in New York and Toronto did not buy gold. You saw last year, new money into ETFs went down. Actually, more money was pulled out of the U.S. ETFs than was put in. So very bearish from the sort of classical investor side, and yet the gold price went bananas. It was the best year in gold in, I don't know, maybe my whole lifetime. As a proportion of what it started out, it went up 27%. So it was a really great year. And I'm not surprised at that. I was very broadly forecasting higher gold prices last year. But I didn't expect to do so well. So today, who cares what happened last year? What's going to happen this year, right? And Yogi Berra said it right. He said, the trouble with predicting is, you have to deal with the future. So it's never simple. But I really have to say to sum up my own views, I don't see why gold would go down this year. Every factor that is influencing gold in the last 12 months is still at play. So I really do expect gold to have another pretty good year. But then you have to ask, and I'm sure you will, the next question is, what about gold equities?
Yes, of course. And I know you're going to be on a panel. I don't think it's happened. I think it's coming up. And the title is very apt. It's Gold Prices Up. Why aren't the stocks moving? So, of course, we should talk about that.
Yeah. So, again, traditionally, I've been in this business a long time. I haven't been for 70 years, but actually for 70 years, there's been this direct correlation between the gold price and gold equities. Gold price goes up, gold equities go up, and vice versa. It's a classic cyclical world. And that broke down a couple of years ago, and it broke down to the extent that gold price had a really good set of runs and the gold equity prices haven't. It's not exactly that simple. I'm really talking more about the small companies, the juniors here. Because if you look at the gold index funds, this place you can sort of see where passive money goes in and comes out, the GDX, between February and October, gold went up 20%, the GDX went up 52%, and the GDXJ, which are the junior producers and larger or more liquid explorers, went up 58%. So it actually did work out in that period. And then a lot of that was given back in the last couple of months. So there has been some move, but by no means the move I would expect in companies like Equinox Gold, which has grown from nothing, really. We started this company, 7 years ago, just with an idea. We were going to try to build a big, gold company that would be really leveraged to higher gold prices. And certainly the gold's moved. Gold was $1,350 when I started Equinox, and it's $2,700 now. Pretty good. We went from having no assets of any significant kind, a couple of exploration projects. We've bought 2 companies, built 4 mines, acquired, how many mines? Acquired 5 or 6 maybe, and sold 2. And it's been a very busy company. The last mine we built, Greenstone, is now our flagship mine. It's up and running. So in that environment, our stock price has gone up a little, but not a huge amount, and nothing like you'd expect in a normal gold market where there's lots and lots of money coming into the space in conjunction with higher gold prices. Just it's a very odd market, and I really think, maybe I'm just, swimming in my own bathwater, as they say, and maybe I'm really crazy biased, but I really do. I thought last year there was going to be a move in the juniors. It never happened. Gold juniors were pretty much flat all year and struggling to raise money. Equinox did okay. I'll go back to that. The large companies, Barrick and Newmont, they're flat or down. So it's been an odd year. And I just, that's rare. Normally big markets, there's a mean reversion that happens. And if that happens, either gold's going to come down this year or the value of the equities will go up. And I'm betting on the latter. So I really expect we're going to have a pretty good year this year, especially if generalist funds come into the gold space.
That's exactly, that's kind of what I was going to ask you is, okay, if we think that we're going to get that change this year, perhaps what is the spark for that change in the equities?
Yeah, I mean, as I said a year ago, I thought it would be a higher gold price. Yeah. You could say that worked for a while, but certainly not on a long-term basis. Gold going to 3,000 maybe. Maybe the tech stocks, the big 7, maybe losing a bit of traction and people wanting other places to put their money. That could happen. Gold is under-owned in institutional accounts across the U.S. It's under-owned by retail investors. There's been some move out of gold into crypto. That might come back. I mean, it's not a lot of money, actually. Don't forget, crypto is valued only at the last trade. Doesn't mean to say there's a huge amount of money that actually has gone into that. But it could be a big discovery. It could be more mergers that create more wealth in the space. It could be any of those, but probably it's going to be a sectoral shift of money from one asset category, bonds, large cap, tech stocks, for example, into this area. And they'll go probably across the board. There'll be some balance. The big stocks will move first, but eventually they'll get down to the juniors. And you'll wake up and every company downstairs at this conference will be 50% or 80% higher than they are right now.
Yeah, well, I think certainly investors would love to see that. And I want to go back, this is connected, but to something that you mentioned at the beginning of the conversation, which is, we've got central bank buying, we know about that, Eastern investors buying, Western investors just not really interested in gold right now. Anything else you would add on why that lack of interest is? What is different than in the past?
Back in, so there was a giant move in the gold equities I can go back many, many cycles, but let's just say in recent years, it was in 2009, there was a huge move up that lasted for like 3 years. There was another one in 2016. There was another one more recently, post-COVID, or during COVID actually, 2001, not post-COVID, during COVID. So we've seen some pretty dramatic moves where I'm talking 20% to 100% moves in most of the gold stocks. That's probably going to happen again in the near future, I'd say. And really, it's like I said, it's hard to really figure out what will be the catalyst for that, but it usually happens.
Okay, well, we'll keep looking forward to that. And, when we talked last year, you mentioned in that environment, you were buying gold equities for the first time in something like 5 years. So are you still buying?
The backdrop there is that I've generally not been an investor per se. I'm more of a developer. I'm a company builder, right? That's been most of my experience and my background. But last year, I just couldn't help. This disconnect was too significant. So I actually went into the market and put a pile of money to work. And I have to say, it hasn't been a win, it hasn't been a loss. It's actually been flat. There's been others kind of, you asked about why the generals haven't come in. There have been some rather anomalous and ugly things that have happened in the space in the last couple of years. We've had a couple of mine calamities, Victoria Gold, for example, single mine calamities that have destroyed a lot of value and worried generalist investors. We've had some countries that have gone upside down. Panama, of all places, banned, open pit mining, and they shut down a gigantic new copper mine. Crazy. And I can go on down the list. Mali's gone bananas in Africa. They're blackmailing the biggest and best company in the whole sector, which is Barrick, and they've had to shut their mine down. So that doesn't help because it identifies risk in this business that generalist investors don't want. I mean, nobody wants. My approach to that is to recognize it's true, but also recognize there are many places and many projects that can go from being distressed or unpleasant to being very, very good. And I've had lots of that happen in my career. So good to bad or bad to good. The way to overcome that problem is to diversify your assets. And so Equinox Gold, for example, now has 8 mines. We don't need 8, we could have 4 in 3 countries, but more than 1. And so you don't have a single asset risk, and you don't have a single country risk. But less of that is good for generalist investors. And then, of course, the other imponderable is that nobody has control over is something like the gold price.
Yeah.
Well, adding $700 on to every ounce you produce, and if you produce, let's say, 1 million ounces, that's an extremely happy event for your shareholders in your income statement. And that can come out of the blue. So that's where the gold companies do have higher leverage than people just buying the gold price. More risk, but much, much higher return, higher beta, more volatility, and you got to accept that.
Yeah, well, and on the country risk angle, I wanted to ask you, so we're in such a time of transition. Literally on this day, we have Donald Trump's inauguration in the U.S. We have Trudeau has resigned. We're looking for a new prime minister. Probably we're going to have an election here. In your mind, do these changes in the U.S. and Canada, does that bode well for mining? How are you feeling?
Flip a coin. I mean, really, I have no idea what Trump's... At the end of this year, I mean, he's just such a bomb thrower. He just likes to disrupt. And I don't think anybody... It doesn't matter. Like, predicting the future is a tough game. Very tough game. So nobody really knows what's going to happen. But I just think, if you look at what has happened to gold in the last 12 months, there's no reason why it's going to change. Gold's done so well for all the wrong reasons. It's supposed to go down. It went up with a stronger dollar. Well, today, the dollar weakened. Gold went up. So it almost doesn't matter. Yields go higher typically. Gold's inversely correlated to yields. That's the treasury bills have got higher yield in the last couple of months, and gold's gone up. It's upside down. So it's a blurry forecast in specifics, but as long as central banks keep buying, which they will do, as long as they don't trust the U.S. dollar, which is what a lot of foreign banks are concerned about, you're going to have a happy story in the gold sector. And silver, by the way. Silver is also going to be very strong.
Yeah, I thought to ask, I know that you're more focused on gold right now with Equinox. I thought to ask you for your outlook for silver as well.
Yeah.
Connected.
Well, silver, of course, is connected to gold. They're both precious metals. But silver has an extra component. It's much more used in industrial demand. And there's a broad range. It's the most widely used of all metals. It's used because it's the best conductor of electricity and heat and has all manner of incredible physical characteristics. The biggest demand sector right now is in photovoltaic cells for renewable energy. And U.S. is... Another thing American investors don't quite understand is how actually less important the U.S. is today than it's ever been before in the commodity business. The driver of commodity demand, of every single commodity across the board, is China. I mean, it's 2 to 3 to 10 times the demand of certain metals, even copper and silver. The big demand is in China, so it doesn't really matter what the outlook in the U.S. is for the industrial production of this or that, or what the U.S. is doing with renewable energy. It's what China's doing. And right now, they're going gangbusters on developing solar production and and renewable energy generally, which uses more copper, electric vehicles, which use more silver. So it's a pretty good outlook for silver, both on industrial demand and as a precious metal. It'll follow gold, but if gold does well and the economy does well, silver actually will outperform gold. And that's what could happen in 2025. But, I say all bets are cautious because I just think capacity for unintended consequences with what happens under a Trump administration is significant. And those unintended consequences can be good and they can be bad. And flip a coin.
Yeah. It's a tricky day for me to be doing all of these interviews. Yeah. So we'll see how that all pans out. I wanted to talk a little bit more about Equinox Gold. So I believe the 2024 production numbers just came out, just over or close to 622,000 ounces, which is in line with guidance. Yes. But I know you're really into scale, so getting bigger. So can we talk about plans for 2020? I know the guidance isn't out yet, but what can you say?
Yeah, I mean, guidance isn't out, but it's obviously going to be quite a bit higher than that because we have all the mines, plus we have Greenstone. Greenstone is just getting going. Greenstone produced, I can't forget how much in Q4, our second quarter of production. The last month in December was 25,000 ounces. And the steady state is, our target there is just under 400,000 ounces for a full year. So I think we're budgeting ramping Greenstone up to hit full-scale production sometime in Q3. It takes long. It's a big mine. There's a lot of things that, valves that leak and gaskets that blow and pumps that fail, all that stuff that happens in a big mine startup like that. So that's kind of happened. And it's typical stuff, and it was all budgeted. But at the end of the day, for us, it's doing some really transformative things. Equinox pre-Greenstone had 4 mines in Brazil, a mine in Mexico that was having some challenges with local communities, and a mine in California. Growth everywhere, but the last 3.5 years have been focused on building Greenstone, and it's now built and running. So a year ago, there was a lot of, quite frankly, concern by people. Were we going to hit budget? Were we going to hit schedule? Because if we didn't do both, it was a serious risk factor, and it could have blown us up. Well, we hit budget, we hit schedule. But a week before we opened the mine up in May, our partner, 40% partner Orion, told us they wanted to sell their stake. They're a finance company, they're not a mining company. So we had to raise $1 billion to buy them out. We did that in mid-May. Well, that added debt, and it added more equity, and nobody likes that, but the result was we got 100% of the mine that we previously owned 60% of. So in the process of building the mine, a lot of time, a lot of, you could say, technical risk, that's done now. Financing risk, that's done. We have a lot of debt. We have about $1.3 billion in debt that we've accumulated to buy all these and build all these mines. And this year, since the mine is built, it's given us 50% of our asset base in Canada, best jurisdiction in the world for mining, a real tier 1 deposit, tier 1 country, and by far the lowest cost of all of our mines. So it's going to bring all of our costs down corporately, deliver a huge amount of free cash flow, which we're going to use now to pay down the debt. That's a really transformative time for us. Much lower risk this year. I'm predicting a pretty darn good year this year for Equinox. We've got growth in other assets. We're hoping to finalize our community issues down in Mexico this next couple of quarters. We're right in the middle of that right now. And great team of people, and just really, I really feel we're hitting our targets. We've aimed at producing 1 million ounces a year, and we're very close. We'll be very close to that after Greenstone gets up and running fully.
Yeah, I'm going to come back to that million ounces. I have kind of an emotional question about that process of getting Greenstone up and running. You mentioned there's people who are doubting, is it going to go right? How did you feel? You've done this before. Were you feeling good?
There's a lot of armchair quarterbacks in this world, and sometimes they're right and sometimes they're wrong. But when you own something, and you can't just be like a stock owner, an investor, where if you don't like something, or if you're worried about something, or if you see something shinier over there, you just sell and move on, and that's the end of your investment. You can't do that when you're a developer. You've got to you own your decisions long term. So right now, I'm feeling pretty good about things because we've done a really good job at Greenstone, and we're not out of the woods completely. We have to get it up and running fully, and that's still lots of technical things. But we're making money there already, and we're paying down our debt. We paid $180 million in the last quarter. So I just feel pretty good about things right now. the more relevant question is, like what next? And I will say, to answer your question you might have otherwise asked, that we are going to be pretty careful with what we do with our cash. It'll be directed mainly at paying down debt. Once we get that to a level, we'll be able to look at, do we buy back shares? Do we pay dividends? Do we reinvest it in the other growth things we've got going? We've got a lot of opportunities, as most companies do, to allocate capital.
Yeah.
The best news of all is, we're actually making money now. We're not just spending it.
That is very good news. And thank you for anticipating the question. That's always helpful. Any M&A in the cards?
Yeah, you never know. We certainly were out of the M&A game for 3 years, or actually almost 4 years. We did nothing since we bought Premier Gold, which was in December 2020. So that was 4 years ago. December 2020, yeah. It was, legal was 2019, Premier was 2020. So, never say never. It's not the focus of ours. We have a mine in California called Castle Mountain. We could build when we get permits. That's going to add 220,000 ounces. We have Los Filos. If we get the community issues settled, we will be able to expand that to about a 300,000 ounce a year mine. That'll add incremental growth. Arizona, we're going underground in one of our mines in Brazil. We just extended another mine from a 3-year mine life to 10-year plus mine life. So there's a lot of other stuff we've got going that we can work on now. First, we have to get this. We had to get Greenstone up and running as our flagship operation.
Yeah, that makes sense. So
big year. Stuff.
Yeah, of course.
There's a very nice position to be in to have those choices.
Yes. Okay, and a little bit bigger picture. There's been quite a lot of M&A in the gold space this past year. What do you think of those deals? Do they make sense to you? Do you like what you're seeing?
Yeah, I think most of them have. Yeah. Most of them have. There hasn't been a real blockbuster deal in 2024 the way there were, Newmont bought Newcrest and then freed up a bunch of assets. The deals in 2024 were more, incremental deals. For example, Newmont selling some of its non-core assets. And the companies that bought them, the market's really rewarded them. They've done really well. Orla Mining, for example, has done really well. It's been well rewarded. G Mining's a Darius stock right now. It's done a nice job with some acquisitions that it made. We did $1 billion acquisition. We bought 40% of Greenstone. So that was pretty significant. But it was incremental. It wasn't, a blockbuster. There's a few out there that might happen. The really giant ones, Glencore and Rio Tinto maybe, or Glencore Rio, maybe Glencore Teck, that's been talked about.
Yeah.
BHP, Anglo American. They tried, they didn't succeed, but those sort of things. So those are the big ones. But in the gold space, there have been some small, medium-sized ones. I see that continuing.
Okay. All right. I think as we're wrapping up here, I've got a couple more questions for you. Is there anything more that you can say about what you're doing with your money right now? We talked about the gold stock angle. Anything else?
Well, I do a lot of philanthropy. I'm investing in a ton of environmental projects, mostly in BC, but, that's a big deal through a foundation I have called the Sitka Foundation. That's very important to me, and I'm putting a lot of time into that. Probably as much time as I am with the mining game. I'm the chair of the BC Parks Foundation. And so we're trying to add huge new protected areas in BC where they don't conflict with other resource tenure uses like logging and mining and so on. And I'm working very hard with Indigenous nations in BC to make that happen. So that's extremely busy. I've got a little junior called Equinox Gold that we've been working on for a number of years that I'd really like to divest because it's part of the business plan. We went to the altar 3 times in the last 4 years with other companies. Each time for crazy reasons, we didn't get the deal done. So in the meantime, we've been doing a feasibility study on this massive low-grade gold deposit in Ecuador, and it's really nearing completion. Will be done in April, May this year, and that'll demonstrate the value. So that's a junior that is sort of a textbook example of how beaten up the market is today. It's got a market cap of 250 million Canadian. Net asset value is probably $6 or $7 billion Canadian. And so that's a rather broad disconnect, right? And it's really advanced, no risk. I mean, no fatal flaws, social license, political license. It's got everything. So I expect that'll do well. That should do well a year from now. I hope I don't tell you that we're still working on it. But it's representative of the companies that I invested in a year ago that are still kind of flat. There's been a handful, and good companies, good value, Investors in the space today should hold. If stocks go up 10%, do not sell. Hang on. Because when the move happens, it'll be a really beautiful move.
Yeah, and once again, I think you anticipate my question, which was going to be your best advice for investors in 2025.
Yeah, get a basket of companies. Don't bet all your money on one company, because you could have a horrible experience in one company that doesn't have anything to do with the people or the geology. Just things happen. In this business, it's a risky business. So have a portfolio, some large, some small, and overall, to the extent that gold does well, if they're gold stocks, they're all going to do well, I predict, in 2025. If gold goes down, unfortunately, I have to say they'll all go down. That's the flip side of the coin.
Yeah. Yep. Important to look at both sides. Okay. Well, we'll leave it there for now. Yeah. The rest of it was a little bit more cheerful. It's realistic. That's okay. Thank you so much for coming by to talk about gold, silver, Equinox Gold. Always great to have you.
Thank you.
Okay. And once again, I'm Charlotte McLeod with investingnews.com, and this is Ross Beaty. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.